Today, we have our business person Zara with us with the queries regarding designated zones.
How would it be if I start my business operations in a designated zone?
Okay, so talking about designated zones. So designated zones are those zones which are subjected to strict control criteria. It requires to have certain security procedures in order to place the control of movement of good and people to and from the designated zones. Then talking, it also has like the customs procedures also, where in terms of the movement of goods and goods in and out of the zone, the designated zone, as well as it is being treated as like being outside the territory of UAE for the VAT purpose for the certain supply of goods. Now, free zone meeting the criteria have been specifically identified by the way of the cabinet decision as a designated zone, where a designated zone is not in the where a free zone, I'm particularly talking about a free zone, where a free zone is not in a designated zone, it is treated like any other part of the UAE. So, talking with the cabinet decision of 59, it confirms that the following free zones in the UAE are to be treated as the designated zones, which you can see below over here. These designated zones will be subjected to special rules for the supply of goods within those designated zones.
Where can I find about the designated zones details?
Designated zone details can be found under the legislation tab on the FTA website, that is www.tax.gov.ae. Designated zone businesses are considered to be established onshore in the UAE for the VAT purposes. This means that they have the same obligation as a non-designated zone businesses and have to register, report and accounts for the VAT under the normal rules. So it also means they can join a tax group, that is a VAT group, provided they meet the required conditions.
How are transfer of goods in the designated zones are treated outside UAE and between the designated zone?
Okay. As per the Article 51(9) of the Cabinet Decision number 52 of 2017 on the Executive Regulation of the Federal Degree Law 8 of 2017 on the VAT, value added tax, taxable person which is established, registered or have a place of residence within a designated zones are considered to have a place of residence in the UAE for the VAT purposes. Now, thus, a business operating in a designated zone will be in the UAE for the VAT purposes, while some of its supplies will be outside the scope of UAE VAT. Since designated zones are treated as outside the UAE for the VAT purpose, a movement of supply of goods into the designated zones from outside the UAE would be treated as taking place outside the UAE. Therefore, no UAE VAT would be charged on such movement or supply according to the public clarification guidelines issued by the FTA, which explains as follows. The first one, in case of transfer of goods from mainland, movement of own goods or a supply from mainland UAE to a designated zone is not considered to be an export of good from the UAE. Therefore, such movement and supply are treated as local movements or supplies. When it comes to the second criteria, that is transfer between designated zones, a transfer of good that is either a sale or a movement of own goods between two designated zones will be treated as outside the scope of VAT to follow the two conditions which is being met. The condition 1 will be the goods either in part or there entirely are not released into the circulation nor used or altered in any way during the transfer between the designated zones. The second one, the transfer for the goods is undertaken in accordance with the rule of the customs suspension per the GCC, like the GCC Common Customs Law.
How does the VAT recovery work with the designated zones?
Businesses operating in the designated zones will be subjected to normal VAT rules of VAT recovery in their expenses. So there are few points which I'll explain to you. The first one is, if a business makes only supplies which is liable to VAT, it should be able to recover its VAT on expenses, that is the input tax, in full. In the second place, where the business makes supplies which do not give the right to the VAT recovery, like example, exempted supplies is, the business is unable to recover the VAT on expenses directly attributed to making such supplies. In the third scenario which I'm talking is like when where an expense related to both supplies that gives right to the VAT recovery and those that do not, the business would require to apportion the input tax in order to identify the recoverable part. So in order to recover any VAT under the normal VAT rule, the business must register for VAT with FTA.
Thank you so much. The clarification was very insightful. Thank you.